Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Tuesday, April 11th, 2023. A very light volume, somewhat quiet day today. Not much to be adding to a current analysis. So here's what I'm going to do. I'm going to start with here on the NASDAQ and kind of go over the alternate and the preferred as we await for tomorrow's figure, which is the CPI, to be released pre-market. And then again, they may wait one more day to get additional evidence of whatever they're waiting for on Thursday with the PPI and the jobless claims. The markets did not really break out of any ranges that are going to change or force account to go in a different direction. But today, I looked again, and while I continue to feel that we're in the 3 and the 4, and we're still inside that 5th, we started to break higher, got caught, dropped back down, not really doing much here in the NASDAQ. So, but there is a possibility, as I have been saying, that this whole movement did complete here at 13,351, actually 348, almost 49. And if that's the case, I'm going to have to get over thinking that this couldn't possibly be the minor 5th wave. That's been my thought all along, that while it could work, and actually it may be, the market, in my opinion, finishing the size of the move that we're finishing would not be spending so much time just holding in a pattern, which is why I leave it as an alternate versus using it as what is actually going on right now. Because my feeling is that if we have completed an intermediate C wave and the primary B wave above that at this level, we should be falling much quicker than here. We fall, we rally. We fall, we rally. We fall, and we'll see. But the alternate count would suggest that the 4 will go up here, the 5 goes here, a C and a B go above it, and this is wave 1. And then we have A, B, C, wave 2, and we're beginning. And if that's the case, we may not be hanging out just here waiting for some direction. The market will likely find sellers, and it'll just start to move and go with some gusto, so to speak, and dropping below 13,000, getting below 12,900, et cetera, as we start to move. Now, what I have done is I put this in. And what that then suggests is as 1, 2, and we're in that 3rd. The 3rd would equal the small 3rd wave. If this is wave 1 and this is wave 2, wave 3 of the start of this movement would equal wave 1 at 12,810. Being that we'd be looking for a little bit stronger of a move, we may drop all the way to 12,564 to complete that initial 3rd wave. Again, I'm not counting even on a minor degree. I'd be counting on a minute degree. So it would be minute 1, minute 2, and we're in a minute 3. And that would form minor wave 1 of the C wave, the beginning of the C wave. So it would be minor wave 1 of an intermediate wave 1. So here's where we start dropping back into trend. And therefore, we're looking for a very large 5 waves down. Let me just show you. If I go out to my daily, I know we have a lot of stuff here. I'm just going to take these off for right now. And so we can clear it up and take a look. So here we have A, B, and we're coming up into C. We basically have already gotten above the high of wave A. So could wave C be done? Yes. And then from that October low, this whole move is done. Excuse me. I have been a little bit under the weather, suffering from a cold/flu. So please pardon me as I cough. And what then that tells us is that we are in for quite the ride going back into the other direction. And let me see if I can go and put this out to the weekly chart and put on some fibs that would cover our downside. So if this is the A and we're going to put the B in up at this high, then now let's just take a look. What are we talking about? We're going to go and use our extensions. We're going to go from here, and we're going to go up top to here. So, yep. So what we're looking at is a C wave, a primary C wave. Primary C would be equal to primary wave A at 7,066. Now, that's what I'm putting into perspective. If indeed that finished it, and we're in a primary C wave down, those would be the numbers. 7,066. And so still, when I pull that out even further, just as an example, I'm not saying this is what we're doing right this very minute, but just as an example, we are coming in to where we should be getting back down to here. Remember, I've held that for the longest time, that we are working through a much larger corrective phase, which ultimately will drop the market substantially from the area it sits in. Now, this is a lot of people are very hard to visualize, hard to see, hard to even deal with because of what they perceive or what they believe is happening now. The market's holding up, the market's doing this, the market's doing that, the Fed's going to pivot, the Fed's going to do this, et cetera, et cetera, et cetera. And that may all be well thought out. But the reality is, it may not be the case. It's only going to take one or maybe one or more things to shake the core of the market. And not just the equity markets, but the bond markets, gold, silver, the dollar, et cetera, et cetera. And it will be, in my opinion now, because of how long we're sitting and holding and moving back and forth, it will be a shock. It will be like, oh my God, how could this happen? It will be, we have no choice. We are going down, and it'll happen fast. So everybody else wants to continue to say, nah, no way, we're going to go up, we're going to go up. We're going to 13,400, we're going to 14,000, et cetera. And again, as I have shown, that also may be the case. I'm going to come back out to the hourly chart. I'm going to take this off, which is a big C because I'm not sure yet. And I'm going to come back down and I'm going to put into play an A, the B, and our C. So these still remain in play. They still remain valid technically. We're looking at a technical market right now. And technically, the Fibonacci does suggest that we should minimally probably get back up to 13,464, 13,655. With, if C is going to be equal to A, all the way back up to 14,150. They are in that realm of technical reality or possibilities. I am not suggesting that that is the only path. A lot of things have to fall into place for that to really occur. And we're just not there. So I'm going to bring it back down to the hourly chart, and let's start holding in some additional Again, using the, excuse me, I'm going to use the Fibonacci extensions, and we're going to go from there, up there, to there, to there. Now we're going to see, we're doubling up a little bit. We have a double at 13,442 to 64. We have a nice cluster, 13,593, 652, 744. And then wave 5 would be 618 of wave 3, very acceptable. So again, I continue to technically show the possibility that, yep, we still could have upside room. Now, what's the market waiting for? It needs a whole lot more information before it's going to engage. We may see some of that energy being released tomorrow. We get the CPI number. If it comes in showing improvements to the inflation war, then this market could just crank itself right up, get up there, and be done with this. So we got to leave all possibilities open. So right now, we have what I've just shown in terms of if it's going to be all done, we are going to drop very quickly, very quickly. If you remember back, I'm not sure exactly when, but we had a CPI number that came out 0.1 of 1% better than what they were looking for, and the markets rallied huge. That's the day that the Dow within 1 minute went up 1,000 points. The S&P went up 150, and the NASDAQ jumped 500 in 1 minute. We may have that setup coming again. For whatever the reason is, how they program and set up the algorithms to respond to tomorrow's number. But please leave open the potential and the possibility that it's not going to come out better. It's going to show that inflation continues to be a problem, and maybe we'll get a downdraft where the NASDAQ will drop 500 and then rally or just move from there. So bear all that in mind. How we want to trade this, again, I'm not going to be preaching from the pulpit here, but I'm a day trader. I find that I can trade the moves each day. And that is more beneficial to me than trying to wrestle with a position, trying to deal with volatility, trying to deal with all of the different factors that come in with carrying an overnight position. So our moving averages, at least on the hourly chart, are pretty much dead still. So it's not really doing much outside of what we have seen. Moving over to the S&P. The S&P, same deal, except the S&P did briefly move to a slight, ever slight new high for this particular sequence that we're working in. But as soon as it did, in that last half hour, it decided to drop like a stone. Now that had everything to do with the zero DTE options that were expiring today at the close. And it was interesting. It was interesting to watch. It presented a whole nother side. It got a little bit more confusing, but nonetheless, it's what they did. It's what happened. So if I'm going to count this as 3, 4, and we're in that fifth wave, again, I'm just going to pull this back because what has remained constant here in the S&P is the fact that if I'm leaving this primary wave A right here at that October low, we could still be in a triangle pattern. That has not been broken or given up yet. I would take this and start putting them here. So instead of a minor, I'd move as in intermediate. So it would be intermediate A, B, C, D, and we're inside that E wave, and that would be the A, that would be the B, and we're in the C, going up. Same type of fibs for the S&P. The down channel for the triangle remains at 4176 to 4180. We have, let me just open this up a little bit so we can get in there and see this. So we have 54, which is where it hit today. Then it was unable to move above it, but we got a lot going on tomorrow, and we could just zip right through it, zip right up, get up into here, and either fulfill the triangle or continue to move higher if they're loving it and finish a 1, 2, 3, 4, 5. Both the triangle pattern and just the straight ABC to complete a primary B wave carry the same message for when it's complete. And that is a turn and a drop, a quick, a fast, a vicious drop. Now, again, we can have a conversation about no way, this is going to happen, that's going to happen, this is what's going to be happening. And the thing that I would put out there, I have no idea what the Fed will or will not do. I'm not going to pretend that I know what that CPI number is going to show. I do have in my mind what people are believing, what traders and investors, or whoever we want to call them, are believing. And quite frankly, I continue to say, I believe a lot of that is being misled by pundits, by people that get on to CNBC and get on to Bloomberg News, and they sell airtime. Again, I'm going to tell you, as I've been told so many times when I questioned why somebody was pushing a false narrative, and I was told very clearly, bearishness does not sell airtime. People don't want to hear negative or what they perceive as negative. They only want to hear what they can perceive as positive. Positive for the country, positive for the economy, positive for the positions. So here we sit. Again, if this is a 3 and a 4, here are our lines. We have that triangle pattern. That's 41.75 to 41.88. Excuse me. And then above that, we have 42.16. How easily could it get way up into here? Very easily, as a matter of fact, very easily. And turn quickly and drop. Not always the smartest move we get right off of the announcement of an economic figure, the data. Oftentimes we see, oops, somebody pushed it and it came out, and then the next move is These things have happened in the past. They may happen again. I'm not looking into a crystal ball and saying this is what I believe. I think there's enough problems with our economy, enough problems with the Fed, enough problems with the banking system, enough problems geopolitically to send us into a tailspin. And it won't take multiple of those problems coming to a head. I believe any one of them could shove the markets into a tailspin. So we're looking for this completion. I still have the 4 marked here. And if we're looking for that 5th wave on a minor degree to complete the intermediate C wave and then the primary B wave, here are our numbers. 41.75, 41.88, 42.16, 42.43 to 54, 64, and 83. That's a cluster. And when you can get these clusters together, they really are pointing to a spot. And price-wise, that should be more difficult to just fly up and get through. If it should occur, then we have 43.13, 43.33. And this zone, I do believe, should be able to contain, if it is indeed a 5th wave. Now, I don't have necessarily an alternate count that would show us that the market is bullish, that the market is starting a new bull market off of that October low. In fact, I'm getting notice from several well-respected chief investment officers from various large banks that have been warning their customers, warning people. This may hold up, but we're coming to a conclusion. This counter-turn rally that began off of the October lows is coming to a conclusion. And when it is done, it's not going to be pretty on the way back down. And a lot of people, I think, are going to be very surprised and caught in what may be a hard lesson. So that is basically what I have. Again, here on daily chart, we have continued. This thing could just go, this intermediate C wave actually has numbers all the way up to 4,500. So technically, again, can the market do it? I don't know if the market can do it. Is it a possibility? Yes. And we've seen some crazy moves, followed by crazy moves, followed by just holding it in a tight range for whatever the reasons are. But in my view, it continues to be counter trend. And I've rearranged way back and put the primary wave here. So either we're getting a straight ABC up, which would suggest we don't get all the way up there. We can. Could we do it tomorrow? A 500-point move out of the S&P in one day to the upside? That would be a tough call. But I definitely can see that we get popping back above 4,200. We get back above that level, that high of the A wave, which is at 4,250. And we move and then complete it up into this zone in here. The bond market sits very, very quietly at the moment, also anticipating and waiting for tomorrow's CPI. All of the markets seem to be waiting for direction. And it's kind of interesting because it seems that each time they get the information, they come up with another reason why they need to sit and wait. I find that tomorrow will likely be no different. We're likely going to get a very big response, possibly in both directions. But I do think that we have, again, the energy has been wound up like a spring. And you can wind it, and you can wind it, and you can wind it, and then finally it gets released. And it's just like, what happens? Bam! All that energy becomes loose. And so I think it could happen to both sides. We get a reaction to one direction, and the reaction just is quickly back into the other direction. And then we go from there. This is where I'm going to leave it for right now. The next update will be on Wednesday, April the 12th. Good luck, everybody, tomorrow. I do believe it will be an interesting day. It could be an extreme volatile day. So be careful.